Hello, mortgage broker community. Welcome to another weekly Wednesday National Broker Sales Meeting. Another great week here of information that we have, updates that we have. We're going to get right into it. Want to talk a lot about this week is focus on how you're placing your intentions. And it's really, really important because I see it on a day-to-day basis in our Brokers Are Better Facebook community. I see it day-to-day in our internal conversations here at AIME, and I hear it in the conversations I have with brokers across the country. It's your intentions that drive your attention, and it's really important you understand what that means. If your intention is to make the most money this month, make the most money right now, then your focus is going to be 100% on getting the most deals in right now and on making the most money over the next couple months. It's not going to be long-term focused. If your intention is to build a long-term business, is to grow a team, is to invest in a long-term business model, then your attention will be on growing, training, recruiting, implementing systems, adopting technology. So think about it in day-to-day business. How are your intentions driving your attention, and how's that impacting everything around you? It's very important that we understand it's our intentions, good or bad, that will drive everything around us. If your intentions are positive, you're going to find positivity because that's where you're going to focus your attention. If your intentions are negative, well, then you're going to find a lot of negative things because that's where your attention's going to be focused. So we have to remind ourselves it's a daily challenge, and it's very important that we're doing it. We're in sales, we're in the mortgage business. There's a lot of moving parts. What we do isn't easy, and if we're not sitting there dedicated, committed to making sure our intentions are driving our goals and driving our attention, then we're not going to succeed and we're not going to accomplish what we want to accomplish ultimately. Another thing is outsourcing versus building a team. You know, one of my favorite quotes I've ever heard from Matt Ishbia is, you can't outsource success, and it's very true. If your business model is focused on, hey, I'm going to use a outside processor, I'm going to, focus on, working with outside people all the time. If you can't control your business, if you can't control your client experience, if you're not in a position where you can take on more business because you don't have the LOA, you don't have the processing support to do it, then you're not in control of your business. And it's very important that we understand that it's right now, times like this, that the investments in people, the investments in developing a team are so important. Think about where our lenders are. I talk to lenders on a daily basis. We talk about service. We talk about not having enough underwriters. We talk about, their turn times are getting backed up. And that's all a reflection of what they did over the last 12 to 18 months, meaning, did they invest in developing people? Did they invest in training? Did they invest in creating a culture where new people are coming on so they're prepared for a market like this? And what we see right now is a lot of people didn't. And you can't prepare for a refi boom like this, but you can have the systems in place, you can have the training in place, you can have the culture in place to make sure that you can scale up accordingly. And right now, more than ever, as loan officers and mortgage brokers, we have to be focusing on developing our teams. I say it every week because it's so important. I see loan officers every single day, mortgage broker owners every single day saying, hey, anybody have a contract processing company? Anybody have a processor they can refer us to? We can't keep up. We can't take on any new business because our current business is at capacity. It's all part of what are you focused on. If you're focused on building a team and building a company for the long term, you're going to invest in training. And right now, if you're thinking about the short term, it might sound like, hey, that's a long-term move, Anthony. I just need to get a processor on board. No, that might fix your current problem today. But long-term, you have to invest in training. Think about the biggest and most successful and most scalable companies in the country. They're all companies that have world-class training. They have world-class people development. And this is something that at the broker level, we can start doing. Start training an LOA. The LOA comes in, they learn how you want to do things. Then they train their replacement and they become a processor. And then maybe they become a loan officer. It's all about constantly focusing on getting depth. It's not about just getting one person and getting able to manage your business. It's being in a position where if you lose that one person, you got the next person and the next person. That's the mindset that you have to have. And you have to understand, in a market like this, if you're limited by your ability to service business, then you're not able to capitalize. You're not able to, be in a position where the market grew by 50% and you're growing your business by 50% because you're stuck at the capacity levels that your one person or your outsourcing of processing is keeping you at. So we got to focus on these things. And I keep saying it because it's so important. You can't outsource success. You have to invest in training and people development and constantly hiring, constantly growing your team. Last week, I talked about wholesale lending. I got a lot of feedback, and it was really, really great, actually, because it helped me understand how so many new loan officers have come into the broker channel over the last 2 years and how unaware people are about the concept of wholesale lending. It is a big, big deal, and I just want to answer a couple questions. One thing that I heard last week is, I had a bunch of loan officers tell me, well, Anthony, it's my job to stay in front of my past customers. Agreed. It's all of our jobs to stay in front of our past customers. That's business 101. But wholesale lending is about having a business partner that intentionally, think about where we started, intention and attention. They're intentionally going after your customer versus true partners that are intentionally trying to keep you in front of your past customers. There's a huge difference there. Do you want to work with a partner that's intentionally trying to go after your past customers? Or do you want to work with a partner that's intentionally trying to put you in touch and keep you in touch with your past customers? That's the difference. That's the dichotomy. Of course, we're supposed to stay in front of our past customers. That's our business. That's our responsibility. But from a partnership standpoint, you have to choose. Do you want partners that are going after your customers, or do you want partners that are supporting your relationship? It's a big, big deal. And more importantly, you have to understand this, is think about long-term the intentions of a company that's a wholesale lender. What is their focus? Are they simply just getting business from you today as a side business just because it's there? Or are they committed to the broker and the wholesale channel? We've been doing, Brawl started 2.5 years ago. So, if a lender at this point isn't supporting that level of commitment to the broker to keep customers with their past customers or keep brokers with their past customers, after 2.5 years, you have to question their intentions. You have to question, are they ever going to come around? And it's really important that we're thinking about that. I understand a lender can have good service, they can have good rates, but the longevity of your relationship with your customers matters. And it's really, really important that we understand that. I talked to a broker the other day that said, hey, well, one of those lenders has been sending me leads and I thought they were a good guy. And then I recently went through my database and started calling some of my past clients, and I had 2-3 in a row that had been refied by that company. So just because they appear to be doing the right thing, make sure you understand. We have the Brokers Are Better Facebook group. We talk about who the wholesale lenders are all the time. Working with true partners ensures a long-term business model where you stay in front of your customers. We're not going to have a lender spotlight this week. We're more or less going to focus on lender turn times. Now, every week in the Brokers Are Better Facebook group, we post lender turn times. They're not always perfect. We try to keep them as up to date as possible. We talk to the lenders on an almost routine basis to make sure we're keeping these up to date and they reflect everything on a region by region basis. But when we are notified that a region's off or something, turn time has improved or worsened, we make sure we update it. But the important thing is that when you're originating loans right now, you have an idea of what kind of client experience, what kind of turn time that you can expect, and you set those expectations with your clients. So review the turn times. People look at Loan Sifter and say, hey, I'm going to compare price. Well, guess what? You got to compare price and you got to compare service. You got to make sure you know what kind of client experience you're going to provide. So make sure you're staying on top of this stuff. And more than anything, it's not just about staying on top of this stuff from a perspective on the lenders. It's staying on top of this stuff so you're in a situation where you set the right expectations with your customer. That's one of the biggest disconnects I see. Is I had somebody reach out to me yesterday and say, hey, can you reach out to this lender? I have an issue. And I said, well, when did you submit your last condition? And they said 48 hours ago. I said, well, I'm looking at the turn times and it looks like it's a 48-hour to 72-hour turn time on review of conditions. Well, let's wait another day. Let's wait for them to actually be out of turn time. That's you having to understand this is your business. You know the turn times. You submit the conditions in a certain period of time. You can't escalate something if they're within turn times. Know your guidelines, know your turn times, understand where your lender's service levels are at, but make sure you're communicating that back to the customer. Because if you're telling a customer, hey, this is going to be a 21 to 30-day closing, and guess what? The turn times from that lender is going to put you at 45 days. Well, expectations are going to be off from the get-go, and you're going to be in a situation where your processor, everybody's stressed out because you set bad expectations from the get-go. So make sure you're setting the right expectations. And just understand this, everybody in the country is slow right now. If you're doing a refi, if you're working with a bank, you're looking at 3 to 4 months to close a loan with the big bank. In retail, the average refi is closing in over 45 days. So don't worry about, trying to compete on, hey, I'm going to be the guy that closes the fastest, or I'm going to tell my customer we close the fastest. That's not the game. The game is setting expectations correctly. So make sure you know how long the turn times are. Make sure you set the expectations with your customer. They're not going to go somewhere else because somebody's doing it faster. Everybody is in line. We're closing loans just as fast as any other channel. Next up, we got Rene Rodriguez. I talked to Rene earlier this morning. I'm really excited. He's got some really great information to share with everybody. I hope everybody is listening to what he says each week. I've personally grown. I'm learning new skills. I'm learning new strategies from Rene. He takes his time and puts not only his time into this, but throughout the week, he's working on game playing to make sure he's bringing new value to brokers every single week. So Rene, thank you. You look great. Appreciate you joining us again.
Thanks, brother. It's always good to be here.
One of the most important things to remember is what your job is when you first meet people. And there's a great study that talks about doctors and bedside manners. And what they did is they watched doctors interact with their patients, and they had patients rate the doctor when they left. And what they found was that patients that ranked the doctors highest in terms of bedside manner had one distinguishing factor. And that was that the doctor spent 30 seconds of focused attention with them. It wasn't 3 hours, it wasn't 3 minutes, it was just 30 seconds. And that same 30-second rule applies in sales, in relationships, in all of your business activities when you first meet somebody. We've heard of the 30-second personal commercial or your 30-second elevator pitch. I've got all sorts of opinions on this, but I want to make it really simple to understand. You have two things that you have to accomplish when it comes to your first 30 seconds. And that is, you have to create relevancy and credibility immediately. You are in a world that has options, it has choices, and the ability to scroll to the next, tap through to the next one, or meet another person. All of the people that you're trying to get attention from have options, and other people that are trying to get their attention. It's a pretty interesting place to find ourselves. So we have to make sure that we make relevant connections and that we show that we are credible to even talk about what it is that we're talking about here. And so relevance and credibility have to happen in that first 20 to 30 seconds. And I want to give you some language to help you get started in that process. The first one is this concept of I work with. Now, it's critical to understand the importance of framing. You've heard me talk about this many, many, many times. When we talk about, if I were to say, used car salesman and all the negative emotions that come up with that, unfortunately, you in the mortgage and real estate industry have the same stigma. With movies that came out like The Big Short and all the things that happen in the market, there's some mistrust that's going on. And so if I were to say, hey, I'm a used car salesman, you can trust me, all of a sudden we know that that just carries with it all sorts of negative stigma. So you have to be able to answer this question of what do you do in a way that doesn't bring up that negative emotion. And so here's a great way to start. I work with, that's a great way to understand what your customer and who your customer is. And so when you think, do you work with first-time home buyers? Do you work with families? Do you work with renters? Do you work with investors? Who is it that you work with? And if you think, well, I work with everybody, well, then no one's going to know what you do. Decide what that focus niche is. That doesn't mean you can't help other people outside of it, but there's something really powerful about having that focused niche. So I work with families, maybe just keep it real simple, looking to. And if you can't answer this looking to question, then you don't know their needs. You don't know their problems. You don't know their challenges, their pains. So what is it? I work with families looking to build wealth. That might be a real simple addition there. Looking to move out of rental situations, looking to invest in their future. Whatever it is that your niche in their pain, and combining those two pieces to then be able to go on to how you help them. I work with families looking to build wealth. I help them, and this is where your unique process comes into play. If you don't have a unique process, you can't articulate your process, you got to begin there. I work with families looking to build wealth. I help them identify opportunities. I help them look at ways to invest. I help them uncover hidden opportunities. There's all sorts of ways to be able to answer that question. And then the last part here is I have the unique capability of. This is where your unique value proposition comes into play, the thing that really sets you apart. So if your unique capability is technology, or maybe it's your ability to research the marketplace, or maybe it's access to different programs, whatever your unique capability is, this is where you talk about it. So I work with families looking to build wealth. Family's customer, build wealth would be their challenge. And I help them identify unique opportunities. I have the capabilities and relationships to see what's in the marketplace before anybody else does. Maybe that's a great relationship you have with a realtor partner. Or maybe I have unique capabilities in technology that allows us to do a rent versus own analysis, or to forecast in the future what different buying decisions mean and to see them side by side to be able to make the best decision. Do you see how when you put all four of those pieces together, it starts coming together very, very simply? So make sure you understand who your customer is, identify what that is, what their pain is, and then how you uniquely help them with your process and what your unique capabilities are. And when you end it, you don't just end with assuming they're going to say, let's buy, because the purpose of this commercial is to get you to the next step. Maybe that's just to a meeting, but to establish relevance and credibility. But you want to end with the most important thing, which is what we call a power question. Your power question tees you up for what we call your power response. Have you ever had a question that you just wish somebody would ask you? Or that they would say, well, how does this work? Because you're just ready for that? Or do you have questions that you're nervous that people ask you because you're just not ready for it? You got to be ready for this. And this power question tees you up to talk about what you're best at, tees you to talk up about what you're most unique and where your most value comes from. And so when you think about your power questions, I'm going to make available here in one of the links a list of power questions that you can start asking and start customizing for yourself. So remember, relevance and credibility happen in the first 20 to 30 seconds. Put together how you're going to respond in multiple different scenarios. You should have a bullet in the chamber for any one of these scenarios. So again, how productive was your next week? What did you put in that little box? Was it a story or was it a number that you can be proud of? We'll see you again next week.
This week's AIME featured mortgage broker on the Broker to Broker podcast is Dan Larenko. Dan Larenko, a great mortgage broker, great loan officer, and a really personal story for me on my relationship with Dan. We did our second AIME event in 2018 in Colorado, and Dan at that time was working for a retail lender, came to our event in Colorado, and I met him. We talked about what's going on in the broker channel. He talked about his intentions and his goals of better serving consumers, giving them the best rates, giving them the best service. And, after a career in retail, he made the transition to go work for a mortgage broker in Denver, Colorado. And I'm proud of this guy because he went from $35 million in 2018 as a retail loan officer. Last year, he closed over $70 million in 2019, doubled his business. First year in the broker channel. This year, he's going to close close to $100 million. This is an all referral, purchase-driven, customer service-focused loan officer who's had a great career in retail, making the transition and tripling his business in 2 years. That's an incredible thing. It's a great podcast. Dan's a great friend, and he's been an incredible ambassador of the broker community. So I hope everybody gets an opportunity to listen to the Broker to Broker podcast. You can go to aimgroup.com to get a link to it. You can go to any of the podcast channels to listen as well, and we're going to put it up on YouTube. Broker to Broker Network Partner of the Week is Lead Pops. Anybody that's in the Brokers Are Better Facebook group knows Andrew Pollack, the team at Lead Pops. They're a true partner of the broker community. These guys absolutely kill it. They create unbelievable websites for our community. They optimize them specifically for brokers. They completely understand what the needs are, what the pain points of us as small entrepreneurs, loan originators. We spend a lot of time talking to these guys about making sure that, just little tweaks. How can we make sure these websites are going to be found by consumers? How can we make sure that they're optimized for conversion? And they've done an amazing job of responding to the feedback, delivering a great product. We're proud to be partners with them. Andrew Pollack has been an unbelievable ambassador for the community. So, if you're not already working with Lead Pops, take a look at them. They're a great partner. They'll spend time with you. And the other thing is, Andrew Pollack puts a lot of content out there just to show you how to, set your AdWords campaign, how to set your paid search and paid social. He does it for free. He just puts the content out there. So follow him even if you don't sign up for Lead Pops, because you're creating so much value for the broker community. So Lead Pops, great company and true partner to the broker community. Next Tuesday, we have at noon, Barry Habib will be joining us. We'll be doing a Facebook Live. It's going to be a one-on-one. It's going to be about 45 minutes, and we're really going to focus on what the second half of this year looks like. We're kind of going into this Facebook Live talking about how we can set loan originators and mortgage brokers up to communicate to their real estate partners, to communicate to their teams, to their customers, what is going to happen here in the second half of the year. We saw the big jobs report last week, 2.5 million jobs gained. That was a complete surprise. So, we've seen the housing report this week up 13% year over year. That was unexpected. So some really, really positive trends. Barry's going to spend some time with us. It's exclusive to the broker community. And we're going to talk about all the things that we're seeing statistically and how it's going to impact us in the second half of the year, and also where we see rates going, Q3, Q4, and into 2021. So please join us, Facebook Live, noon Eastern time on Tuesday. Big announcement today. We've been working on this for a while. I appreciate everybody's patience. One of our priorities has been, how do we get authenticated broker rankings out to the public? How do we create a single source of truth? Everybody sees on CNBC the mortgage applications data that's reported on a weekly basis by MBA. MBA, over the course of time, became the source of truth to major media outlets on mortgage applications. We want to make sure that we can become the source of truth for major media outlets when it comes to top loan originators, top brokers. This is verified data. We spent the last 6 months breaking down the 2019 data. We worked with several data aggregators. We also got information from brokers, but we re-verified that information against the data aggregators. So live today, if you go to aimgroup.com, we did our first phase of broker rankings. The first phase is going to be the top 100 brokers, top 100 non-delegated correspondents. We broke it out so there's not mixed in. So first 100, true brokers. Separate 100 are non-delegated. So we want to break that out so there's a clear line in the sand between the two, but that's verified data. We want to congratulate all of the participants, all of the companies that helped us put this list out. I also want to say this is the first phase. We'll be announcing in future weeks the top 250 loan officers, the top 250 mortgage brokers and non-delegates. We're going to expand that list. So look out for that in the coming weeks. What I do want to say is we didn't publish the actual production data. We just published the rankings. We're not here to compare, this guy did this amount of loans, that guy did that amount of loans. That's not what we're here for. We want to create a credible source to show who the top 100 are, and that's going to be the same thing that we do for the loan originator side. So, check that out. It's a great resource, and we're looking forward to promoting this in the future and helping bring more attention to the broker channel, to the top brokers in all these states, and top loan originators across the country. Last thing I want to leave you with for the week is the understanding of it's not about just doing more. It's about doing better. And one of the things I get concerned about when I see people post about, hey, I'm taking on this business. I'm placing it with X lender because they have the best price. And I see that X lender is currently at 45 days start to finish and closing. We have to set a higher bar, guys. It's about doing better for our customers. Again, going back to the beginning of this, intentions and how that drives your attention. If your intention is just to make the most money, then that's what you're going to get short term. That's not going to long-term result. If your intention is to provide your customer with the best experience, it changes the dynamic. So I want us to think about not doing more just to do more, but doing a better job, providing a better service. When I talk to lenders and we get into the data on, hey, what's the average conditions on a loan that comes out of underwriting, purchase versus refi, and I compare it with different lenders, it shows me a lot of people are just submitting crap in, crap out. We know that. Can't do that. We got to be better, especially right now where everybody's so backed up and fulfillment is so slow. We need to be in a situation where, hey, listen, if it's going to take us 8 days for a loan to get underwritten or 10 days for a loan to get underwritten, we got to make sure when they underwrite it, they have something to underwrite. If you only gave them, 10% or 20% of the documentation that's required, well, guess what? You're going to wait 10, 15 days to find out that you need to give them 80% more. Let's focus on doing a better job up front, and then we can focus on doing more. So I'm going to leave that as the tip of the week. I hope everybody has a great rest of the week. We appreciate your support, and we look forward to seeing you next Wednesday for the weekly sales meeting live on the AIME Facebook page. Have a great day.